Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into next week? We have seen hedge funds and money managers yet again increase their net long positions in gold in the latest week, and of course last week, especially towards the end of the week, we saw gold firm yet again for the fifth weekly gain here as we continue to see uncertainty with respect to US-Iran tensions. And of course we also had non-farm payroll data on Friday, which came out worse than expected, and as a result that put pressure on the S&P 500, on the dollar, and springboarded gold higher into the close. Not only gold but also platinum and also silver of course as well. Last week we mentioned to you that we actually had a fantastic trade on palladium, banking 1,750 points profit. We continue to hold 3 positions on silver, where we'd entered into those positions at $16.60 and just below $17, and we continue to remain in our gold positions where we'd entered under $1,500 as we were in mid-December, anticipating of course this seasonally very strong time of year for gold. And of course at the beginning of last week we did see gold prices break out to 7-year highs, hitting 1,610 US dollars per ounce. But we did say to watch out. Don't FOMO in at the start of the week. Wait for that gap to get filled, and there might well be an opportunity for you closer to non-farm payrolls to get in at a better price. And of course, we saw gold prices break all the way down to 1,540 US dollars per ounce, giving some really great opportunities for us to add also additional positions at those lower ranges. So with that, let's actually move over to the charts and we'll talk you through exactly what we're looking at for the week ahead. So first of all, just moving over to gold, which right now is trading at 1,559 US dollars per ounce from the Sunday open. And as we go into a new week, there are a few points that I want you to bear in mind. So first of all, let's just go over to the monthly chart, and you can see here very clearly on the monthly chart where we basically got that breakout of the bull flag that we have been anticipating here on gold. And this has been in development over the months of December, of course, breaking out of that bull flag in January. I'm still expecting more upside over the course of this month, and I am expecting eventually a breakout back towards 1600 again here. If we go out now to the weekly chart, you can see here where yet again we've just had a bit of a pause in the latest week, but very clearly we've broken out of some significant resistance on the weekly chart, breaking above the $1,600 level. But of course we mentioned to watch out because many traders are going to FOMO in after they see all the headline news across various news feeds that gold had broken out to 7-year highs, that gold was trading above 1,600. This is when you want to be very careful. That's when the trade was becoming a bit crowded, had definitely the vulnerability to have a correction. And in actual fact, if you go over to the daily chart, that is where many traders who bought in a bit too high there have not been able to withstand that sell-off, and it's been over a 700 point move there from the highs. But a great opportunity to bank some profits at the upper end of those ranges and then get back in at lower prices. So with that, what are we looking at for the week ahead? So basically I'm going to be looking at resistance coming in approximately around that 1583 handle as we go into next week. Okay, so I'm looking at range bound trade, the potential as well to come down and revisit the lows from certainly Friday here. We may get a push down to 1545 at some time over the course of the next week, but ultimately I am looking for a push higher, range bound trade, but I am looking for a move higher back towards that 1580 to 1585 zone. And of course once we get up to those levels, then the price will start to magnetize back to 1600. That's the anticipation here with gold. What I'm not looking at, I'm not looking for a full-on correction here for gold, not at this time of year, not when we know the seasonality is very strong, not only over the month of January but also over February. Platinum has led the move with the metals over the last couple of days, and we've also seen silver catch a bid, breaking back above 18 US dollars per ounce. So I believe the pullbacks will be relatively shallow. There will be many traders who start to get bearish if we do revisit the lows from the previous week, but it could just be a very, well, I anticipate in fact it will just be a good opportunity to build additional positions around that 1545 zone if we do come down and retest those levels. And then I'm looking for a retracement back towards these highs again around the 1580 1585 level, but then ultimately coming back towards the 1600 zone. So that's the opinion there on gold as we go into next week. Bear in mind as well, we've tended to see that usual counterflow quite frequently at the beginning of the week on a Monday or Tuesday. So it's quite possible that during the European session into the London session on Monday and Tuesday, that's normally when we get the pullback. Okay, that's when we get the fake out move to the downside at the beginning of the week, where traders start to get bearish if they're not aware of the usual cycle for gold. They start looking to sell into it. That's where you typically get support as you go into Tuesday and Wednesday session, especially. These dips are then normally starting to provide some upward momentum from Tuesday and Wednesday onwards, and then often it's from Thursday and Friday where you do get the breakout and you get the move back towards those levels that I've just mentioned around the 1580, 1585 zone. What I would look at as well is platinum for correlation. Platinum led the breakout last week, and that enabled us to get some really nice entries on gold last week. One of our better entries there was 1547, getting to that position last week, which moved nicely with a breakout to 1562 after non-farm payrolls on Friday. This is the bull flag I'm looking at on platinum. Platinum so far over the course of this month is up over 1.2%. I am looking at more upside. Typically, platinum generates 3 to 4% over the month of January. It's already broken out of this bull flag. It's at the upper end of the range there. Hasn't had quite the same sort of pullback that gold has. If you consider that gold had over a 700-point pullback from the high that it produced last week. Okay, so I am keeping a very close eye on platinum to lead the metals going to next week, and I wouldn't be surprised at all to see platinum come back and retest $1,000 per ounce. Now, with that, you also want to pay very close attention to silver as well. Silver, as I mentioned, we have 3 positions on this market. Now, what silver often tends to do is catch up to gold. And gold, of course, has broken out to 7-year highs, whereas silver, really the best it's been able to do recently is break out to the highest level since approximately September of 2019. If it breaks above $19.60 per ounce, then yes, we're at 2-year highs, but silver is still massively lagging behind gold. And I do believe that we're going to catch up. Normally, silver, within the gold-silver ratio, it turns as we go into January and into February as well, and silver does outperform gold. And silver is still only at $18 per ounce. So I'm definitely looking for the potential of silver to build up some momentum, come back towards that $18.85 handle, break out then back towards $19 eventually over this month essentially, or if not this month, then as we go into February. This is typically a very strong time of year for silver where it tends to outperform gold. So essentially, I'm looking at pullbacks as buy opportunities. The same really to be said for silver here, that if we get a pullback next week back towards the lows from Thursday and Friday around $17.80, I would be looking at as an opportunity to build further positions there. I wouldn't be looking at it as a major corrective move there. I'd be looking at it as a shallow retracement, an opportunity to pick up a better price, then taking the price action back towards the recent swing highs here around $18.85, back to those zones. That's what I'm looking at basically for silver as we go into next week, capitalizing on the range. As I mentioned, we've already got 3 positions on that we actually got in really tight around that $16.60 handle. One of our first trades there, then a couple more positions we built in underneath $17 that we talked about, of course, around December on the week ahead plans as well, so that you could also monitor and track what we were doing there, because that worked out fantastically with the breakout that we've seen so far on silver over the months of January and the end of December as well. Then finally, let's just move over to crude oil. So crude oil going into next week, basically I'm looking for the potential to break back towards approximately $58. So we may overshoot that and come down to around 57.50, 57, but then I'm not looking for a prolonged move here. Hedge funds and money managers have yet again, they've built additional net long positions in the latest week. I'm looking them for range bound price action, but then a retracement back towards a $60 to $60.50 handle for oil. I am looking for basically oil at the end of the month to start building up a breakout to the upside and then really starting to pick up momentum. This alongside other energy markets as well. Typically, oil, other energies perform very well into February and into March. We've had a very dramatic correction last week, over a 7% pullback to the downside. I'm looking at a little bit more potential downside here. If we break down below Wednesday and Thursday and Friday's lows there, we could easily tap back towards 58, possibly $57 per barrel, but I wouldn't expect this to be a prolonged move. Possibly we may see a bit more weakness next week, but then ultimately setting up for a great buy opportunity later on in the month of January, certainly into February as well, where the anticipation is that this will set up for a really great buy opportunity as we go into this very seasonally strong time of year over February, March, and of course hedge funds and money managers, yet again in the latest week, they have increased their net long positions with oil. So with that of course has been the week ahead commodity report. If you would like to join a community of successful traders at the Gold and Silver Club and really make sure you have an edge with your trading in 2020, if you're doing a review of 2019 and you just felt that you didn't have enough of an edge in the markets, perhaps you're using outdated technical strategies which just aren't really working in today's market conditions, or you just want a bit more information, you want a research driven approach in the markets where we're taking into account what the hedge funds, the money managers are doing versus the retail traders in the market. We're taking into account market flow, cycles in the market, seasonality, geopolitical news, fundamentals, marrying that up with our in-house intelligence, which then provides us with strong edge in the market. And that's really what you want for 2020. So again, there is an opportunity for you to join us at the Gold and Silver Club, and of course join a community of like-minded successful traders as well. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also have access to our real-time trade alerts, real-time trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel, that way you're always kept updated with all of the latest commodity reports.